Welcome to Crowded Market Report by Jason Shapiro. If you want more from Jason, subscribe to Crowded Market Report and get access to the CMR community, weekly reports, charts, and other exclusive content. Learn more at www.crowdedmarketreport.com or click on the teaser in the right corner.
Hello. Today is, it's Friday night, October 6th, 2023, which shows you what an unfortunate loser I am. But having said that, that is what day it is. I am Jason Shapiro with Crowded Market Report. And today I am going to discuss the COT report, which I know I have done before, but I'm going to do it again because I want to give some examples here. And I've been using COT since 2000, so we're going on 23 years of me using this. I haven't had a down year in the market since I've been using this. This is my not only source, but a very, very important source of data for me, because as I've explained in the past, what I'm looking to do is fade mass consensus, and I want positioning consensus. The COT shows me the positioning, so therefore I can measure whether there is consensus there, and when there is mass consensus, I'm looking to go the other way. So again, real quick, I've talked about it in the past, but if we look at this, the red line is commercials, the yellow line is small speculators, and the blue line is large speculators, which is divided by the CFTC, who puts this report together, by people. They actually call them reportables, which are the large speculators, and non-reportables, which are the small speculators. If you put a certain amount of futures contracts on, you have to report it, which they are doing because they don't want people to try and corner the market. So those I call large speculators. You can call them reportable positions. And the yellow line is everybody else that doesn't have to report. People that are 1 lotting, that are 5 lotting, that are 10 lotting. Those are non-reportables, or what I call small speculators. And because there's a long for every short, the commercials, who are people like gold miners, are commercial, for example, in gold. Oil drillers, for oil. They will have an equal and opposite position than the large speculators. And what I'm looking to do is, when these speculators are massively one side, I'm looking to go the other way. And I look for market confirmation before I do this. That's not the point of this video. I just want to give sort of a raw look at the commitment of traders. And just to be fair, I'm going to go across just about every market, okay? Just so I'm not sort of picking different ones. So as an example, and this is just examples from this year, here is Currencies, which we basically amalgamated all the currency positions into one chart, which our charts allow us to do. We can go to the individual ones too, Swiss franc, whatever, Japanese yen, euro, pound. But let's just keep it easy, and let's just say Currencies, right? So you can see this is July 18th, all right? Right here was Friday, July 18th. Or I guess it's Tuesday, July 18th. You started to see speculators getting massively long the currency, which means they were getting massively short the dollar. So let's just say mid-July, speculators started getting massively short dollar. All right? Well, if we look at the dollar, this is mid-July. They got massively short here, really into this drop in the dollar, right? They got massively short into that, and look what's happened since, right? Straight up, right? And if you want to get into the individual ones, I can cheat because I know where the most crowded ones were, but the British pound was where the largest crowded positioning was, okay? Where speculators were massively long British pound, right? So we're looking to go short British pound somewhere in there, right? And what you had in mid-July in the British pound was right here, right? And you had a really nice move down here. And just as an aside, the risk here, if you had shorted it right, was a very small amount. And the reward was a good 20 times the risk, which is just a massive trade. 20 to 1 risk reward ends up being a massive trade. So that was kind of what happened in the dollar this year when things got crowded. Let's go ahead and look at the next one, energies. Well, let's start with this. Energies. Well, you can see starting in about late August, early September, these speculators started to get massively long energies, right? And where it was mostly done was heating oil, right? You can see they started getting massively long heating oil here, right? Late August, early July, right? So again, you have to wait for some form of market confirmation before putting the trade on. And we talk about that on Crowded Market Report all the time, what that confirmation is, etc. But even just eyeballing heating oil, you had a move from mid-September to now. That was a pretty darn big move. You gave up from here, which was late August, or late July, August, September. You gave up 2 months move in about 2 to 3 weeks, right? They were too crowded. The thing turned. They had to start getting out. This is the theory, right? People are super long. It turns for whatever reason. It starts going down, and you have all these longs that have to start getting out because they're getting hit. Their stops are getting hit. The moving averages are getting hit. Their stop losses, their trailing stops, they're getting hit. And there's nobody to take the other side because they're all long. So you get a very big move, in particular a risk-adjusted move, right? The move compared to the risk that you would have taken is relatively very big, right? Let's go to equities, which I know everybody loves. So, this one happens to be better, I think, on an individual chart, just because of there's a few different equity markets, obviously, but it started with the NASDAQ, right? In the early part of the year, January, February, we started seeing massive shorting going on by speculators in the NASDAQ, right? Which is why we were getting long NASDAQ. And in fairness, the market bottomed somewhere in here. I didn't get long down there. There was no commitment to traders telling me to do so. But by January, this stuff was saying, yeah. And this was, I put this all over Twitter and everything, but it was saying, yeah, it's time to buy NASDAQ in January, which is what we did, okay? And this was sort of January in the NASDAQ. And as we went on and as this bull move started working, we saw them get out of NASDAQ into sort of late April, right? But by that point, they were getting super short S&P. So we rolled it into S&P. And then they got kind of neutral into June, right? At which point I got out. And if you look at this has sort of been neutral since June, right? The NASDAQ has been neutral, really. Well, NASDAQ was neutral all the way from kind of here, right? April. And Dow, they were still short, but kind of went neutral sort of June-ish. So that gets me out of these trades. And because the risk reward is no longer there. And if you look, obviously we can pick any of these, but here's the S&P since June. The market really, the market's always going to move one way or the other, but it's gone nowhere in that period. So the commitment of traders went neutral. The market ended up going nowhere, just whipped around up and down, because there's no positioning edge there. Okay? So that's what happened with equities. Let's move on. Fixed income. This one's very interesting because what we had in fixed income this year was, and I've talked about this a little bit, but we had large hedge funds who are considered the large speculators doing this massive basis trade where they're buying the cash bonds and they're selling the futures against it and they're making a little tiny amount. But they're levering that up a ton so that that little tiny amount can be a much bigger amount. And that's why we have seen the large speculators very short fixed income, and therefore the commercial is very long. But what was interesting is that these small speculators, who are clearly the worst traders over time, have been long fixed income this whole time, which is why I have been talking about why I'm so bearish fixed income and, that I wouldn't be long fixed income. This could not get me short fixed income, unfortunately, but it did keep me from getting long. And there was one time where we did get long fixed income, all right, during this year, which was here, okay? We had a very quick trade. Usually these trades last 2 to 3 months or so before sort of they complete what we're trying to do. But in here, in March, we kind of caught this move in fixed income, right? And I did a video about that then, by the way, which I think is our sort of headline video on our YouTube thing, so you can see that. But we caught this move, because during that time period in fixed income, you can see that was around here. You actually saw the small specs getting quite short. The large specs were short. The small specs were short. The commercials were long. We got our market confirmation. We got long, and we caught the move. And very quickly, you can see the small specs went from being short to long. We get out. It was just a few-week trade, but it was a nice few-week trade, because, like the 10 years, for example, went up quite a bit. I mean, if we were risking this little bit right here when we got it, and we caught this big bit, it's a big return to risk, right? So that was fixed income this year. Got us long for one quick great trade, has kept us from getting long the rest of the year while the market has just been going straight down. So sometimes missing, the losing trade is just as important as getting the winning trade. We did currencies. We could do crypto. Bitcoin showed speculators. See how they're mixed here. So there was really nothing in Bitcoin. At a certain point here, speculators started getting very long in September, but now have started to come off. And I don't have the Bitcoin chart up, but Bitcoin essentially went nowhere from here. It tried to rally, it came off, and it really went nowhere. And then now has come way off. So now there's a possibility Bitcoin could go up, but I don't trade Bitcoin. I don't know that the history of Bitcoin on the COT is enough to really be able to judge it. I know there's some strange things that go on with Bitcoin. Like if you do a 2-lot, you're considering a large speculator. So I don't trade it because the history of the data to me is not enough. But just thought I'd put it there anyway since we're doing them all. We already did currencies. We already did energies. Grains. There really haven't been very many trades in grains. I can remember one trade in grains, but which was a soy oil. Where we were getting short, I believe it was back in here, right? I don't remember. Or actually, maybe we were getting long. We were getting long in here. You can see the speculators were long. This was the shortest they had been in a very long time. Commercials getting long. We were getting long back in there. So let's see. Bean oil, which, by the way, is a market that I know nothing about. Okay. I'm from the suburbs. I've never worked on a farm. I couldn't tell you what bean oil was, but we caught a good part of this move right here from the June lows. You see that reversal day right there? That was on, that was on May 31st. Okay. So we look at bean oil May 31st was coincidentally right here. Okay. And we were getting along right there. And then by the time this all happened, we got out. So we caught a nice little move there. I think it lasted like 3 weeks or something like that, but we caught a nice move there. I don't really want to get into livestock. But like here, even softs, okay? Cocoa started showing massive long positioning by speculators, right? And then we can then go look at what happened with the cocoa chart, right? And I'm cheating a little bit here. Which I'll get into, but cocoa went from 3,800 to 3,400 from mid-September, okay, until now, the first week of October. And in mid-September, the cocoa chart was looking, pretty ridiculous here. Speculators were super long. Now, if you had gone back here, you would have said the same thing. Without the benefit of seeing that they were going to get longer here, you would have said the same thing, back in June, right? In fairness. And if you look at the cocoa chart in June, if you were trying to short that, you got ripped. But it happens. Commitment traders is not perfect. I've always said, right? It doesn't do the an incredible job of forecasting every single move all the time, right? Sometimes it can be crowded and the market keeps going. Well, that's where risk management comes in. If you had tried to short this stuff in June, well, you would have gotten stopped. That's all. You just stop out. But then you would have caught this. You could have gotten stopped here for a little bit. You could have gotten stopped here for a little bit. But then you catch this, it makes up for all that, right? So that's what it did in cocoa. And the last interesting one I will point to is orange juice. Orange juice has been trending up all year, a pretty massive trend. You're talking about something that's gone from here, 200, to 377, which is a pretty big move, right? And if you look at the commitments of traders in orange juice, what it has told you is that the speculators have not got massively long, so you're not looking to get shorted. So like if you're a trend follower, for example, and you can be looking at this stuff and saying, hey, these guys are not crowded long yet, so the risk is not there for a big move the other way, so I can continue staying long, right? Which is exactly what you've wanted to do. The volatility of the orange juice might have taken you out. If you had just been trailing stop, you probably would have got hit here, you would have got hit here, you might have got hit here, you might have got hit here. But the commitments traders would have told you, just stay long, man, because these guys haven't gotten super long yet. Now, again, let's be in fairness. This thing bottomed in January. If you look, orange juice looked like it was a humongous sale at the end of January. Well, orange juice clearly was not a humongous sale at the end of January, which is here, right? It's here. So, okay, there might have been a little bit of a sell here. You might have gotten short, right? Reversal day here. You might have gotten short, made a little bit of money, but then you would have gotten ripped. But what you would have done is you would have gotten stopped. And from that point on, okay, you took a little loss. And from that point on, you wouldn't have gotten short this thing the whole way, and you're still not getting short this thing, okay? So, what I'm trying to say here is, yes, commitment of traders is not perfect. But I can promise you, as someone who has traded this stuff for over 20 years and who has had success trading with this data for over 20 years, like, I wouldn't be using this data if it wasn't working for me. I promise you that. I'm not here to sell you commitments of traders data, okay? If it sucked, I wouldn't be talking about it, right? This has helped me make money for over 2 decades. This stuff can really help you determine where good risk-reward trades are, all right? And I've just gone through all these markets and showed you examples of where that worked and also where that didn't work. But the works end up being a lot better than the didn't works over time. All right. So that's really my message for today. If you haven't looked at this data, I would very highly suggest doing it. We clearly talk a lot about this data on Crowded Market Report. We also offer charts on this data. These charts that I'm showing are actually charts that we put together, and you can get Commitments to Traders data for free. Okay, you can get Commitments to Traders charts for free in many places on the internet. All the major charting services that are free on the internet do it. But I can tell you, quite frankly, ours are better because we do more markets. We can change time periods. You can go on these charts and change the time period from whatever this is, 1.5 years to 30 years or however long the contract goes back. You can combine the charts like I showed across markets instead of just, hey, the 10 years or 30 years, here's all the fixed income. Here's all the equities, right? Here's all the energies, right? Added together. Or you can just put 2 together or any combination you want. Or you can look at, NASDAQ and bonds or stocks and bonds over each other. What's the relative performance? You can start thinking about relative trades. It's really good. My partner put that together. When we started this, he's done an incredible job. It's really good. I think we charge a very small amount for the chart-only service. It's something to take a look at. So anyway, check it out, crowdedmarketreport.com. Love to see you there. Always happy to have questions and comments. And as usual, I hope everybody has a very profitable week. All right, thank you.
Subscribe to Crowded Market Report by Jason Shapiro.